Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon, all. Ira Epstein of Linn & Associates with your metals market update for this Monday, the 23rd of October, 2017, and we're at 1:40 p.m. Central Daylight Time. So the event of the day has been the strength in the dollar. It's really not impacting gold all that much, which is interesting as can be. We've seen the stock market languish. Anybody that calls this much of a break, come on, that's not what's going on. Yeah, it's in the red, but there's no momentum to the downside. The metal markets have no momentum to the downside either. I would have thought they could do more than this. Gold did get down to $1273.60 today, and this is going to be actually where it settled. I looked at the settlement price, $1281.20. You're right in the zone of just about where everything settled. Now, when I say settled, I realize it's 1240 Chicago time, 140 Chicago time, I'm sorry. But remember, the markets close at 1230. Or settle is the right word. They don't close. They trade till 4 o'clock Central Time, 5 o'clock Eastern, but they settle at 12:30 Central, 1:30 Eastern. Settlement's different than the last trades of the day, but that'll be where the settlement comes in. The big news, obviously, the dollar index, the concerns what's going on in Spain. Now you have two regions of Italy that are suddenly standing up and saying maybe they want their independence. We have a whole host of central bank meetings this week. So you got to pay attention to the European Central Bank. That's going to be super important. We're going to see what the Bank of England wants to do. There was a snap election in Japan yesterday, Sunday, and it seems to have given the Diet, as it's called, the parliament in Japan, the two-thirds majority that Mr. Abe had, and he's going to continue it. And he'll probably keep with the easy money policy there. But there is an article that they're looking at in Japan, and that's with their military. Right now, they're only for defensive. Expect them to move to offensive again. That hasn't happened since the end of World War II, but with what North Korea is doing, you get to a point where you've had enough. In the weekly chart of closes, this is a key area on gold. I want you to look at the 18-week moving average of closes right there. This is what the battleground is. Now, there's two numbers I'm looking at. Take out and close back over the 1300 level, and I think the market has successfully retraced, and it's bullish again. Close under 1271.60, and you establish those lower highs, lower lows, and you could be headed down again in this market. On a daily area chart of just closes, you're in a down thrust. You have fallen roughly $24 from this peak. You've got a pattern of lower highs, lower lows in closing terms. When we look at a daily bar chart, you get to see how the market has shed its rally back down. The market we can call from 1308 into the low 1260 area. When we look at swing lines, they're lower. Lower highs, lower lows. So to break this bear pattern, a bear pattern is called lower highs, lower lows. You have to take out 1292.90. So that's a number that the bears will be looking at. Where's the support? I want you to look at the 100-day moving average of closes in the 18. This is where the market is fighting right now for the support zone. If it takes out 1292.90, you end that. If you get back under the lows here, you extend it. Where might you extend to? Well, the 100-day average of, the lower Bollinger Band, I'm ahead of myself mentally. The lower Bollinger Band is 1267.40. And if you run, and I'm not going to put the chart, the line on the chart here, the 200-day moving average of closes, it's very close, around 1262. That's your secondary levels of support. Your primary, as I call it, is the 18 and the 100. You're poking, but you're not closing under those levels of support. Momentum has worked itself back from being overbought way up, like, let's get to here. Here, back down, as you can see, into an area where it's now fighting. Bulls need this red line to reverse back over the blue. Bears need it to stay like this and keep the market from going anywhere. This is your battle zone. Who's got control right now? The bears. Why? Lower highs, lower lows, the close under the 18-day moving average of closes, and momentum has not turned up. In the gold ETF, which is GLD, look at the 100-day average. That's what you fell to today, and notice how the market came back, challenging, just missed by 3 cents so far at least, the 18-day moving average of closes. But like the futures, and this one seems to be mirroring it, lower highs, lower lows, bearish, downside bias, momentum still down. In GDX, which is the gold mining stocks, often this leads the market. It's not turning. So I'm looking at this as still bearish. Lower highs, lower lows, but if one were a bear and you hit the lower Bollinger Band, which is 22.90, you missed it today so far by 7 cents. You did get to the 100-day average, and you are oversold. You're approaching important support in the market. That's very important, and some people might have paid attention to that 100-day average since it's acted as a nice buffer in the past for some support in the market. See the different areas that it went to? It can be slid through when the market's here where it's over the 18-day average. It acts as a buffer of resistance. Here it's the support. So you've got to understand where it's at in relation to the shorter term averages. In the gold silver, there's no story. You came down from 75.48 to right through here, just under 7,500, and you're back to 75.04. It's not giving you a heads up on anything. Silver got down today to both the 100-day and the 18-day average of closes, and all it did is hold it. Momentum in the market is in the, 60s. It's no longer in overbought territory. I want you to look at what these 18-day average to the 100 is doing. It was under it as we were sitting here on Thursday, last Thursday. It got literally to it on Friday, and now the market is crossing over it, and price is over the 18-day average. Could be a warning sign that this market's ready for some upside action. If it is, the 200-day average has been very, very powerful at 1733 right now in stopping rallies. In the copper market, you have to keep your eye on the 19th Party Congress, which comes to an end on the 24th. Isn't that tomorrow? And when it comes to an end, we're going to see the new leadership of China. Generally, it's introduced right on the last day. I don't know if there'll be surprises or not. I don't know how they're going to treat Mr. Xi. We'll find out. Is he going to be considered like the other great Chinese leaders? I don't know enough to tell you. I can tell you that copper, the production has gone up in China. Now we're going to find out what they do. They've been adding money via reverse repos to their system, so we'll see what that does. And you've stalled out. You are overbought. You're in an uptrend. If you take out 313.80, the market could be headed a bit lower. You had an embedded reading that was lost. Often, that means price and the 18-day average come together. But the longer it takes, the shallower the break that often accompanies it, and that seems to be what this market is doing. When we come to the platinum market, you went up to the 18-day average of closes, seem to have run into a brick wall. You still have a pattern of lower highs, lower lows. That pattern's broken if you take out 928.40. I would guess if you take out today's lows, you might be able to get to that lower Bollinger Band. Seems to me that we got a pattern there that is very, very important. In the palladium market, you have had lower highs, lower lows, but you're staying over the 18-day average. The two nullify. The bias is up, the trend is down, momentum is down. I'm just looking for the 18-day average to be where traders try to figure out what to do. Last, in the dollar index, you're up to an important zone, the upper Bollinger Band and the 100-day average of closes. They're together. They're literally at 93.80 to 81. Momentum's up, the trend is up, but you're hitting a brick wall right here. Do you pop through it and run or not? That's going to be what the market has to ask itself. So when we look at it, what we try to do is give you an idea of research. You know, everybody can offer a commission rate. People can offer you a trading platform. But what differentiates firms often is the quality of the research that they can provide to their clientele. And I think we are right at the top of the heap. That's my opinion. In fact, one of the things you'll notice as these markets mature and get on in their age and firms do different things, as they go lower and lower in their commission striving, they take away something often. Can't say every firm does it, but often. And one of the things you take away is paying for people to provide research. They'll say, you got a cheap enough rate. Go out and get your own research. Well, we have our own staffs here. We don't believe in that. We're old school. We're a boutique firm. We're not trying to be the cheapest guy on the street, and we're certainly not going to the other end of expense. But we want to work with our clients, provide them with knowledge that we see at least, throw it at you, let you either make your decision, work with our brokers, let them explain what's going on the old-fashioned way. We actually talk on phones. It's a surprise. So how do you get this? Well, it's simple. We'd like to show you a trial of what our clients do get for having an account with us. Call. You can go to our website, sign up for it. You can click right up here if you're watching me on YouTube, or underneath us on many websites says, click here for Ira's free information. Do so, and away we go. I'm Ira Epstein. You have a good day, and I'll see you in the end of the day financial report in a bit.